Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this Becky quick. While the average man looking at this act like she fine as it. I'm over here looking at tails and whips like 5-6. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounce. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Hey, make profits. That TTG money gang, making profits. We some snipers.
I gotta go. Hey, yo, what's up, everybody? What's going on, folks? Welcome to the True Trading Group live stream. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group, and I'm thrilled to have you all with us here this evening. Before we get started, I want to thank our partners and our data providers at Benzinga, TradingView, NASDAQ, CBOE, and of course, OpenAI. Those companies are the foundation of what powers TTG, and we are grateful to be able to provide our platform with their data and their tools integrated to help you all learn, trade, and profit consistently. This innovation has not gone unnoticed. Just last year in 23, True Trading Group was a Benzinga FinTech Award finalist for Best Data Analysis Tool. And this year for 2024, we're coming for that #1 top spot. See, but this isn't just about winning awards, though. It's about being part of a community that's constantly growing, learning, and pushing the boundaries of what's possible in trading and investing. Members of True Trading Group are part of something special, and I couldn't be prouder to be on this journey with all of them. Now, let's roll up our sleeves tonight. We're going to get into tonight's session. We got some killer content lined up. I got some excellent questions that a lot of our members sent me in that I'm going to be answering and responding to, some fantastic topics that we're actually going to be covering here today on this live. But if this is your first time hanging out with us, okay, if this is your first time hanging out with us on True Trading Group's YouTube channel, do yourself a favor, hit that subscribe button and don't just smash the like button. I mean, don't just tap the like button, smash it like you just hit your biggest trade ever. And don't keep this all to yourself. Share this stream on your own social media. Let's reach out. Let's educate. Let's empower as many retail traders as we possibly can. And I want to give a big shout out to all of our annual members of True Trading Group that took the time to engage with me over this weekend. I answered about 100 text messages personally this weekend, helping out some of our annual members on things that they were struggling with. So it was my pleasure to do that. I had a little bit extra time. So we sent out some text messages. A bunch of our annual members were saying, hey, this is what I need help with. This is what I'm struggling with. So a big shout out to all of our annual members that were engaging and participating with communicating over the weekend. It was a lot of fun. We're going to maybe do some more stuff like that. But I got some really fantastic questions from a lot of our annual members as well that we're going to be getting into and talking about here today. Now, I know what many of you might be thinking if you're new to the channel. You might be thinking, who is this guy? Why on earth would I listen to him? I'm not even a Yankee fan. I get it. I don't fault you for not being a Yankee fan. But the reason why you should pay attention to the things that we discuss on this channel, it's because I didn't figure this stuff out on my own. I was trained by professionals on Wall Street. My very first job out of college, working at T3 Alpha Fund, they had me go through a training program before they let me touch $1 of the fund's money. And then 2008 happened. That was the Great Recession. That was the big stock market crash. It was the same year, though, that I received one of the firm's Trader of the Year awards. Now you fast forward now today, and I'm the co-founder and head trader of TTG, along with my team of 8 professional full-time trading moderators and over 30-person staff. We've helped thousands of members from all over the world to reach their goals. We have members in 115 different countries, truly a global community here at True Trading Group. So whether you guys are looking to level up, you're just getting started, or if you need a little bit of an extra push to kind of pick yourself up, trust me, you guys are in the right place. Stick around. We're going to make a whole bunch of moves together. Now, before I do move any further, I want you guys to stop what you're doing and make sure that you are watching this video live. Right down there in the bottom of the corner, you should see a red dot next to the word live. If you do not see a red dot next to the word live, that means you're watching this video delayed. You need to click the word live to make sure you are watching this live stream live and not delayed, because I'm going to be giving away some prizes later on during this live stream. And if your name is called, you're going to have 2 minutes to send a text message and provide some code words that I'm about to give you. And if you do not do that within the 2-minute window that we allot for you guys to respond once your name is called, then you're going to miss out on winning the prize. So if you're 15 minutes delayed, your name could be called. The 2 minutes will come and go. You'll have no idea, because for you on the delayed stream, your name wasn't called yet. But in reality, those 2 minutes are gone. You missed your chance for your prize. So make sure you guys are watching this video here live. Okay. The way this giveaway works is I'm going to be giving you 2 code words. The first one's coming right now. The second one's coming later on during the stream. You must give us both code words if your name is called. You got to send a text message to a phone number we put on the screen. The first code word is market. Market. That's the first code word. Market. All right. Your first code word is market. All right. The second code word's coming on later on during the stream. So write down the word market. That's the first code word. You're going to need to know both in case your name is called. Okay. You're going to need to know both in case your name is called. All right. And at the end of the stream, like I said, we'll put everyone's name into a random name picker, call the wheel of names. We'll spin that wheel here live. All right. Also, if you guys want to make sure you receive the message from us in case your name is called, take a moment and send a text message to 1-888-621-2127 with your name, email. And if you are not a member or not, text us 1-888-621-2127. This is in case you want to make sure you receive the message from us, just in case your name is called. So take a moment, send a text message to 1-888-621-2127 with your name and your email address. All right. There you guys go. 1-888-621-2127. So we got to make sure you guys are going to go ahead and smash that like button. So welcome everybody. I'm going to take a quick little sip of water. We're going to get down to business time. We're going to talk about this because markets got a little rattled last week. And I'm going to assume, maybe I shouldn't assume, because you know what happens when you assume, you make an ass out of you and me, but I'm going to assume anyway. I'm going to assume there's some people that are on this live stream right now that saw what happened in the markets last week and their buttholes puckered up a little bit. And I'll blame you for that. Last week was the worst week of the year. It was one of the worst weeks since the COVID crash of 2020. It's the worst week for the semiconductor ETF since March of 2020, which was the COVID crash, what happened in March. And here's a real fun fact. You want to talk about real fun facts on why people might be a little nervous about what happened last week? The markets got their ass handed to them last week. You had a heavy sell-off last week. September is historically the weakest month of the entire year. If you go back over the last 100 years and you were to look at January through December, every single month of every single year, historically, September is the worst performing month for the stock market throughout the entire year. For the last 4 consecutive years, the markets have gone down in the month of September. 2020, 2021, 2022, and 2023. Every single one of those years, the month of September was a red month. And it wasn't a red month by just 0.5%. The markets got their asses kicked every single month of September. Let me show you. Let me just show you. Let's just go through it real quick. Let me go through and I'll just show you some examples, right? Here's 2023. So let's zoom into 2023. Well, let's highlight the month of September. There's the month of September. Okay, there it is. There's September. The market got its asses handed to it. Let's go back even further. Let's go back to 2022. Right? Let's see what happened in 2022. Let's highlight the month of September in 2022. There's the month of September in 2022. Markets got its asses kicked. All right, let's go back to 2021. Surely the markets didn't go down in 2021 in September because 2021, the markets made new all-time highs basically every single month, right? Yeah, pretty much. Look at that chart. Goes up every single month, right? Not exactly. Let's zoom in. Let's take a look at the month of September. Oh, wait. Let's highlight the month of September. There is the month of September. Markets got its ass kicked. Let's go back even further. September of 2020. Well, September of 2020, the markets couldn't have gone down, right? They went down during the COVID crash, but after that, we just went straight to all-time highs, didn't we? Not exactly. Let's go back and let's highlight the month of September. There's the month of September. So this is now every single month of September for the last 4 years, the markets got their ass kicked. And so far, 2024 appears to be no different. There's so far September of 2024. Now, at this stage, I firmly do believe and expect another 5th consecutive red month of September. But the fact that September is the weakest month of the year was amplified this past week because if you look back over the last 100+ years of every single red month of September, now we know September is the weakest month of the whole year. Last week was top 5 worst starts to September ever. Top 5 worst week to start off the month of September. So I don't blame people for their buttholes puckering up a little bit, but it's important that we put this pullback that we got last week, and it was an aggressive pullback. I'm not trying to just kind of swipe under the rug the aggressiveness in the selling pressure that came into the markets last week, but there's a very good reason for it, and we're going to talk about that here on this live stream tonight. But the main thing that I want you to focus on is not even so much the reason why the markets went down last week. What I want you to focus on most is how the hell you are going to make money from it. The markets went down last week. Who cares? What are you going to do about it? You can't stop the market from going down. You can't make the market go up. You are a passenger on this train. You need to understand, no matter the direction that we are headed, you need to understand strategies and ideas that allow you to make money, whether or not the markets are moving up or they're moving down. Because as it stands right now, it looks like the markets are going to continue to go down here in the month of September, possibly even bottoming out in October, and then continuing to then maybe bounce back in November and try to rally back into the end of the year and going into December. To me, it looks like we've had a little bit of a breakdown in a lot of charts. I take a look at the S&P. I take a look at the NASDAQ. I see some broken charts. I see some support levels that were broken. I see some resistance levels that were just absolutely solidified. And I see downward momentum over what was one of the top 5 weakest weeks to start out the month of September in the history of the stock market, which could be, if I'm right, which could be the 5th consecutive year where we have a sell-off in the month of September. But what's the constant in all of those sell-offs in 2020, 2021, 2022, and 2023? The markets were red all 4 years. What happened after that? I'll zoom out. What happened after that? There's your red September. There's your red September. I'm sorry, I highlighted the wrong area. Whatever, I don't need to sit here. It's going to take me too long to go through and highlight all those things. But every single time after you had that red September, right? Every single time you had that red September, what did the markets end up doing? They moved back higher, right? Another red September. What happened? The markets moved back higher. Another red September. The markets moved back higher, right? Another red September, right? You guys get the point, right? Now, I want to put into context for you that although it felt like last week was something horrific, we're still less than 5% away from an all-time high, right? We're still less than 5% away from an all-time high. Now, I do think you're going to get a little bit more of a pullback here. I don't think that last week's sell-off just gets taken right back up. I think that you're going to have some lingering weakness throughout the course of the rest of the month. You also have some very important data points. Very important catalysts that are coming up. You've got CPI and PPI inflation this week. That's going to be important. But the real big thing is going to be the Fed meeting this month. The Fed meeting this month, they're going to cut rates for the first time in a few years. They're going to start that rate cut cycle. The question is it 25 basis points or is it 50 basis points? And I love the fact that the markets don't know, because this is the first Fed meeting that we've had. I'm going to call this so when you hear someone say it's a live meeting, that means that there's a chance for monetary policy to be changed. That means that's what a live meeting means. When a meeting's not live, that means everybody knows that there's going to be no change in policy. They're not going to raise rates or cut rates. So this is a live meeting in that sense. But I'm going to go one step further and say it's a live meeting in the sense that the market has no idea what the Fed is going to do. For the last 2 years, every single time we had a Fed meeting, there was no question of what the Fed was going to do. There was no question of, oh, we're going to keep rates. We're going to keep rates where they are. We're going to keep rates where they are. We're going to keep rates where they are. We're not cutting. We're not cutting. We're not cutting. This is the first time that the markets don't know what the Fed's going to do since early on in the rate hike cycle, when it was like, are they going to raise by 50 basis points? Are they going to raise by 25 basis points? Are they going to raise by 75 basis points? There was a period in 2022 where the markets were like, maybe they're going to raise 100 basis points because inflation was getting out of control. You remember the type of volatility that we experienced in 2022 when the market didn't know what the Fed was going to do. That's how the market works. The market is a forward-looking mechanism. It looks out 6-9 months into the future. The market does not trade off of where we are today. The market trades off of where we're going to be 6-9 months from now. And when the market can't see into that time frame and it gets real cloudy, it has a hissy fit. The market doesn't like unknowns. That's when volatility picks up. And when volatility picks up, money-making opportunities flourish. For us as day traders and swing traders, we want volatility. Okay? It's the people that don't understand what's going on in the markets. They don't understand how to make money when markets go down. Those are the people that are terrified. They're scared. They never want the markets to go down. Let me tell you something. Very selfishly, I want the market to go down because I make money faster on the way down. And so do you, and so do TTG members. It's easier actually to make money on the way down because it's just faster. Everybody wants instant gratification. Don't you all want instant gratification? Wouldn't you rather get into a position, hold it for a couple hours and make 200% on your trade, or get into a position, hold it for 1 or 2 days and make 200% on your trade, rather than get into a trade, hold it for 2 weeks and make 200% on your trade? We're creatures. We are greedy people at heart, right? It's not a good trait to have as a trader, but when it push comes to shove, you guys want to make money. You want to make money quickly and fast. That is what volatility provides. When I tell you this is the greatest trading environment that I've ever been in my entire life, I've been doing this 18 years. I've seen a lot of different market environments. This is the best trading environment that I've ever seen. It's not a coincidence that members of True Trading Group are having some of the best years that they've ever had in their entire life. And it's not just because the markets just came off all-time highs. It's not just because they own Nvidia and stocks like that are making new all-time highs. Not recently. Recently, you've had Nvidia take a big hit off a 140 all-time high. Nvidia is now down to 102. That's a significant pullback in the price of Nvidia. If you were asking me, should I buy Nvidia when it was $130 a share, then you should be asking me if you should be buying it at $102 a share. And I'm glad a lot of our annual members that sent questions to me this weekend are asking me specifically about Nvidia. What should they do? Should they sell Nvidia if they own it? Should they buy it if they don't? I'm going to answer all of these questions for you. But again, I want you to remember, the goal of you being on this live stream is to make money. It's not just to feel better about what's happening. It's not just to watch other people make money. Now, like I said to you before, I selfishly want the markets to go down because when markets go down, stocks make bigger moves in shorter periods of time. That means bigger percentage gains for us as traders in shorter periods of time. That's exactly what we want. This is why True Trading Group members are reaching the milestones that they are. And I'm not just saying that to you and you should just believe me because I say that it's true. You should believe members themselves. Now, we have 2,700 people that are watching this live stream with me right now, many of which are actually members of True Trading Group. So I'm going to ask them to actually explain it to you. Members of TTG, I have a very simple, straightforward question for you. Are you making money with True Trading Group? Are you becoming better traders? If the answer is yes, type the number 1 in chat right now. Now, for anybody that's on this live stream that is not a member, you should pay attention to how many people you see type the number 1, because these are your friends, your family members, your coworkers, your Uber drivers, your accountants, your nurse practitioner, your veterinarian, your auto mechanic, your barber, your IT professional, your health insurance agent. These are regular people just like you. And if they're telling you they're able to make money, why can't you? Look at all these people. They're not luckier than you. That's not why they're making money. They don't have all the time in the world. They're not sitting in front of their computer screen. It's not COVID anymore. These people are back at work. 82% of them have a full-time job. I don't want to hear the excuse, oh, I don't have time. Bullshit. Yes, you do. Make time. If I told you you could supplement your income, if I told you that you could not have to worry about what the price of gasoline is, if I told you didn't have to worry about what the price of eggs are, if I told you didn't have to worry about how high your car insurance and your health insurance rate just went when you renewed your policy, if I told you that you wouldn't have to worry about it because you were able to supplement your income through trading, you find time for that. If I told you that you would be able to realize a different level of financial freedom that you thought never was possible, was out of reach for you because you're capped at your earning potential at your job, make time for that. These people did. Success is not going to be handed to you. You're not going to become a millionaire overnight. I'm not just going to show up next to you, sit at your desk and trade your account for you. You've got to be willing to make the changes, and you've got to be willing to make a little bit of effort to realize the goals you've set forth for yourself. And if you are willing to do so, all of those people that just typed the number 1 are living, breathing proof that your goals are a lot closer than you think. How many people on this live stream right now are not members of True Trading Group? Type the letters TTG if you're not a member of True Trading Group. I'm just curious to see. Type the letters TTG if you're on this live stream and you're not a member. If you're not a member, just type TTG. Now, we got a lot of stuff to cover tonight, right? We have a lot of stuff to cover. So just, go ahead, type TTG, and then, we're going to get into my Nvidia analysis, the impact of inflation, semiconductor analysis. We're going to go over recession fears. Is the market going to bounce, or is the sell-off going to continue? We're going to go over a lot of that stuff here tonight. But let me see first who's not part of the community. I'm not going to say your username, but that's hilarious. We got Lair Mazalov. How are you? I totally just butchered your name. I'm sorry. We got Nidin. We got Zane. We got Clint, CR, Rock, MB, Jim, Kathleen, Kimosabe. We got Eugene, Sean. There you are, brother. What's up? We got RGB. What's good? Ken, how are you? So we got a lot of people. We got Armin. How are all of you doing today? I'll tell you what. you guys are taking the right step. You're definitely heading in the right direction because it's Sunday evening, and here you are with me on one of these live streams, which is fantastic. Now, I don't know if that's just because you're looking for like a hot stock tip, or maybe your butthole was puckered up last week and you want to know, should you be selling all of your positions? Is a recession coming? What are other people doing? You probably have a lot of questions, and that could be why you're on this live stream right now. But I really hope deep down that the reason why you're on this live stream is because you want to learn how to make money from all this stuff. Because at the end of the day, that's all that matters. All that matters is making money. I don't care how it's done in the markets. I don't care if it's up, down, options, equities, crypto, futures. I don't care how you do it. We have 8 other professional traders that are moderators in True Trading Group. It's not just me. We all have different styles. Some of us trade equities, some trade options, some trade futures, some day trade, some swing trade, some core trade, some just do long-term investing. There's literally something for everybody inside True Trading Group. And when I tell you that this is really the main goal here, it's all about making money. I mean that so much so that we actually offer a double your money back guarantee at True Trading Group, and it's based on your ability to make back your membership fee. So that if you're not able to make back your membership fee, we actually don't just give you back your membership fee. We give you back double your membership fee. That's how much that we believe in this platform and its ability to help you reach your goals, which is make money. And I think that it should be based on that. It shouldn't be based on my P&L or somebody else's. I can make $1 billion. So I get $1 billion. Guess what? Now one of those bajillions is going to go towards paying your bills. So what we should do is say, hey, if our program actually works and this community, this platform actually works, then you should be able to be positive. You should be able to make back your membership fee. That's why we do it the way that we do. I know I talk a big game on this live stream. I really do. I get it. I understand. But we back it up with our own money. We put our money where our mouth is, and that's how we prove it to you. Now, I get a lot of people were scared last week. How do I know people were scared last week? Because I literally talked to a bunch of our members over the weekend. I got a lot of questions from people on social media. People were hitting me up on Twitter or X. People were messaging us on Facebook. They were sending in emails to the website. They were asking questions. So I know people were nervous and people were scared. So what we've decided to do as a group, Adam pushed back on this me, but I was like, listen, this is what and Adam's my business partner and co-founder of True Trading Group, for those who don't know who he is. People are worried, and I'm going to give you my thoughts on this over a market. But before I do that, I'm going to give you guys a chance to join True Trading Group at the discounted rate that was last week with the Labor Day sale. We were getting rid of it because obviously Labor Day is over, but people are scared. And I don't want you to feel like something that you're worried about. If you're interested in this and you want to, become part of a community, I don't want you guys to feel like, oh, you know what, maybe this isn't for me. No, it is for you. And all those people that were typing the number 1 before are proof that it is for you. And in case you missed it before, I'll ask one more time. Members of True Trading Group, type the number 1 if you're making money. Very simple, straightforward question. Just type the number 1 if you're making money. Okay. So in case you guys missed it before, I'll just ask that question one more time. Type the number 1. If you're making money, you're becoming a better trader because of TTG. So if you think this isn't for you, you're dead wrong. It absolutely is. And all these people are proof of it. Now, for those of you that are not members that did type TTG, what I want you to do, and again, I'm going to keep the membership price. Our membership, was supposed to be $980 for the year. I'm going to give it to you guys, though, still at the Labor Day price, which was $500. It's the entire year. Okay. There's no upsell for courses. All the courses are included. You get all the trade alerts, right? All that stuff is included. Go to ttgoffer.com. Okay. That's ttgoffer.com. Every single thing that you see on that page is included for the $500. There's no additional cost or upsell or hidden fee for anything that you see on ttgoffer.com. It's all included. You get our 22 course curriculum, which is a simplified and expanded upon version of the training program that I received when I worked at a fund in New York. Beginner courses, advanced courses, options, swing trading, trader psychology, crypto, you name it, we've got it. You have access to it. You get access to the daily chat room, obviously, with all the trade alerts from the moderators, and access to the mobile app. Download the mobile app if you can't be in front of your computer during the day. 82% of our 10,000 members have a full-time job. Download the mobile app. It's available on iPhone and Android. It connects you to our chat room, and we will send you real-time push notifications when our moderators enter and exit positions so you can follow along with what we are doing, even though you're not in front of a computer. So you'll get notified. They just bought put options on AMD. You can log into your Webull, your Robinhood, whatever it is. buy some put options, set a stop loss, put your phone down. 2 hours later, you get a notification. Oh, they took profit. You log in, take some profit, set a stop loss, put your phone back down, right? You can all do that. That's how our 82% that have full-time jobs, that's how they do it. So you'll get access to that as well. You get watch lists daily from the mods and I, detailed lists and explanations of these are the stocks we're focused on. These are the prices we're going to get in. These are the prices we're going to get out. So you know where we're focusing our attention before the day even starts. We're not Monday morning quarterbacks and come back to you after the fact. Say, ooh, look what I did. No, we tell you guys, this is what we're going to do today. Okay? Win, lose, this is what we're going to do today. And we're not going to be right every time, but we are right a hell of a lot more than we are not. The moderators and I collectively as a group have been able to maintain a cumulative win rate on all of our executions of just around 80% now, going on roughly the last 5 years. So uploaded from our brokerage accounts to the website is every transaction that we make. Every buy, every sell, every stop out, every take profit, every red, every green, every break even. It's all right there for you guys to see. You're going to get 2 small private study group sessions to speed up your learning curve with our mods. You get Benzinga Pro's real-time news feed, Trading View's premium charting software, the Trade Idea scanner streams on our platform for you guys to use. All this stuff is included for the $500. Some of you may pay for Benzinga Pro. Well, now you can get their news feed without having to pay for Benzinga Pro. That would cost you $1,000 a year if you went to Benzinga. You join us for $500, you guys get it. Trading Views charts, the premium version, $600 a year. You don't have to pay for that anymore. It's included when you join TTG. You also have an on-demand video library with 1,000 hours of different workshops covering topics, that our moderators hosted live workshops with members. You also get unusual options activity. You get options flow. You get dark pool data. All of this is included for the $500. So what you guys have to do is go to ttgoffer.com. Okay. ttgoffer.com. Everything on that page is included for the $500. And then don't forget, you guys have the double your money back guarantee, right? Double your money back guarantee is right there on the page. It's in black and white. Go read it. Yes, it's real. Okay. It's right there. All right. I'm going to leave this price because, like I said, some people were scared over the week. I get it. I'm going to leave this for 20 people or midnight tonight, whichever happens first. Okay. But I can't keep extending this price. All right. This was the Labor Day sale from the other week. I'm extending it just because of what's going on right now with the markets crashing and everyone's getting a little nervous. Right. So I'm going to leave it at 500, but 20 people sign up. That's it. We're moving the price back to 980 or midnight tonight, whichever happens first. We're going to move it back to 980. So I'll leave it for 20 people. How do you know you're one of the 20? It's very simple. When you go to ttgoffer.com, does it say 500? If yes, great. You just check out. If it says 980 in your checkout cart, then that means we've sold out of the 20 spots. Okay. Now that W money back guarantee, how it works is the following. I ask you to do these things: go through our courses, pass our quizzes, and attend the study group. Now, if you do those things and you are still unable to make enough winning trades to equal the $500 membership fee, at least one time, we'll give you back $1,000. That's the way it works. Okay. We're going to give you back double your money if you can't make enough winning trades to equal your membership fee at least one time during the membership. And you have the whole year to do this. You don't have to do all these things in like 30 days. Take your time, go at your own pace. Okay. This is good for the whole year. Now I can offer you double your money back because our refund rate is less than 2%. We're 4.6 at a 5-star rated on Trustpilot. Our retention rate's around 78%. So the reason why I can offer you guys double your money back is because that refund rate is so low. If our refund rate was 12%, I wouldn't be able to give you guys double your money back, right? It wouldn't work. I mean, we would go out of business. True Trading is a business. We have 30 employees. I mean, we wouldn't be able to do that. But because it is so incredibly low, I have no problem offering you double your money back to give you peace of mind. I don't think you need it, but it holds us accountable and it gives you peace of mind. So go to ttgoffer.com, grab one of the spots for $500 and get your button chat this week. It's going to be a huge week. You have inflation data coming out this week. We just had labor data come out last week. Then you have the Fed meeting coming out after that. This is going to be a wild month of September. If you're worried about your 401k or your IRA balance going down while the month of September markets go down, then you need to do something to offset it. Let's start buying put options. Let's start shorting stocks. Let's look at inverse ETFs that you can use to make money on the way down. And when the markets settle, you can take that profit and you can then roll that into your 401k, roll that into your IRA. That's what we should be doing. So go to ttgoffer.com now. W money back guarantee is there. There's no coupon code required. Just go right to ttgoffer.com and just check out. This is available for the next 20 people or midnight tonight, whichever happens first. All right. Luabo Antonov says, just for reference, I doubled my money, the THD membership, in the first week. So in the first week, double their membership. Double their membership in the first week. All right. So there you guys have it. So go ahead, ttgoffer.com. If you guys have any questions, send a text message to 1-888-621-2127. Again, if you have any questions, also listen carefully if you're one of the following people. If you used to be a member, or maybe you used to be a trial member, or you're currently a trial member, you must text that number in order for us to give you the $500 price point. You must text 1-888-621-2127. Okay, you must text that number if you are a trial, previous trial, or previous annual member and you want to come back home for this price. You have to text that number. Otherwise, if you guys are just brand new, go straight to ttgoffer.com, sign up, and let's good to go. My Lead Nation goes, I made $1,500 in my first week with a small account of just $500. Boom, there it is. You don't need 25K, guys, in order to do this. You really don't. A couple $100 is all you need. And I'll prove that to you as well. Guys, can you do me a favor real quick? And then we're going to get into all the analysis and all the content here for this evening. I'm going to give you my top trade ideas. We're going to answer some questions. Just go ahead. What did you start with when you joined True Trading Group, like in your trading accounts? Let me rephrase that. If you started with less than $1,000 in your account, can you guys comment in chat real quick? Just tell me what you started with. Just comment in chat what you started with. Josh Crawford says you haven't gave me a reason to come back yet, Mike. Josh, I don't want – Josh, then don't come back, brother. Good luck doing what you're doing, man. Good luck doing what you're doing on your own. Don't come back. That's actually very simple. My Lead Nation started with $500. Josh Crawford, you know that I already gave you a reason, because if I didn't give you a reason, you wouldn't be on my live stream. So don't kid yourself, man. Maria Hart started with $300. Smooth Brain started with $400. Zane started with $5,000. Okay, Bud Girl $200. Thomas $500. Fibonacci started with $400 and hit $6,000 last week. Joe started with $3,500. Lency started with $150. Josh Crawford, put your ego aside, bro, and let's get to work. Very simple. Put the ego aside and let's get to work. We'll be your best every day. Started with $100 on August 13th. They're $2,800 before market close on Friday. BX started with $1,000. Just being with TTG, I was able to get it to $3,500. Okay. In 2 weeks. So, guys, don't take my word for it, right? Josh Crawford says I didn't give him a reason to sign up yet. I mean, I guess all of these reasons that people are saying aren't good enough. So maybe, Josh, maybe you're doing better than that, brother, on your own. I don't know. But if I were you, I'd put your ego aside. I would sign up and I would say, let's get back to work. That's what I would say. But it's on you, man. You do whatever you want. It's your life. It's your money. It's not mine. Let's head on over to the markets, guys. Let's take a look and let's go over some very key and some very important levels. We have to welcome Clinton. Clinton, welcome to the THD family. Everybody welcome Clinton. I mean, there's 19 spots left. 19 spots left. There's Clinton Carson. There it is right there. There's Clint Carson. Boom. Says, hi. Thank you. Clinton, welcome to the THD family. Guys, I mean, there's 19 of these spots left. Okay, so it's 19 spots. Oh, we got to welcome Jim. Jim just joined. Everybody welcome Jim. Now there's 18 spots. All right, 18 spots left. Jim and Clinton, welcome to the family. So again, there's 18 spots. I'm going to leave the 500 price point. Then it's 980. I'm going to leave it at 500 for 18 more people or midnight tonight, whichever one happens first. All right. So Jim and Clinton, welcome to the family. All right. All right, guys, let's dive into analysis. Let's go over some trade ideas, and I want to hit on some questions that I've got from members. You know what? Let's start with the questions. Actually, well, let's start with the questions. Let's go through some of the questions. You guys were nice enough. We had a nice conversation this weekend. A lot of my annual members, we're talking about what questions that they had. They sent me a bunch of questions. So let's go through a couple of them. I got a couple of questions that I have written down here that people have sent in. So here's a couple of questions. Okay. Wow. Dave Haig says, thanks to TTG, I've used my profits from my trades to pay 100% of my bills for the last 3 months. That's what True Trading Group is about. It's not about buying a Lamborghini. It's about paying your bills for 3 months. Talk about supplementing your income. Dave, great job, man. Congratulations. I love to hear that. Really great job. All right, let's hit it on. Number one question. This is number one question. I got many people sent me this question. Nvidia analysis. They want to know what the hell is up with Nvidia. What about Nvidia? What about Nvidia? What I'm telling you guys right now is first of all, I'm a long-term holder of Nvidia. I've been a long-term holder from 2018 was my first purchase, but it was small. 2020 was a big purchase. Then 2022 was my largest of purchases. And then I bought a little more in 2023. And then I bought more on August 5th this year, around 92 or 93. So I've just kept buying Nvidia as the stock has continued to move higher. It's become one of my largest positions because obviously the stock has gone up 2,000% from when I first bought it in 2018. And then again, 2018, 2020, I actually got the same price. It was around $58. That's pre-split. Right now, that would be $5.80. But that's before the split. Okay. So I'm a holder of Nvidia. Right. So when people want to know analysis about Nvidia, I'll talk to you two ways, long-term and short-term. Long-term, Nvidia will have a permanent place in my long-term portfolio. Okay. You can ask me 10 years from now, Mike, do you own Nvidia? The answer is going to be yes. Now, I already own a lot of Nvidia. So right now, as it stands, as the stock has pulled back from 140 all-time high, from 130 weekly high last week, it's now down to 102. I personally am now, we got to welcome Keith. Guys, everybody welcome Keith. Keith is the newest member to the group. Now we're down to 17 spots. Everybody welcome Keith. Keith's the newest member of the group. Keith, welcome, brother. Glad to have you part of the group. Let's kick some ass this week. So Nvidia, I'm not adding to it right here because I'm good. I own enough of this thing, right? So I'm not adding to it. But if I did not own it, okay, for people that are asking that, hey, I don't own it, but I would like to, right here is a spot that I personally, if I did not own it, I would be buying some. Okay. I would be buying some here in the 90s if I did not own it. I do own it. And I actually bought a little bit right here on August 5th when we had that little, gap down day from the Japanese carry trade when the markets had a huge gap down August 5th. I bought a little bit. The stock was like $92. I just stepped in and bought a little bit, but not like a huge piece because I already own it from much lower prices, but I bought a little bit. So if you don't own it, I think my personal opinion is that that's a good spot, right? The 90s, I think that's a good spot to take a nibble. The next buy point is down around, I would say, if this thing gets into the $75 to $80 range, that's the next buy point. Okay. So here you would say you would initiate your position here. You then add to the position here. That's what I would do. Okay. So if I did not own Nvidia and I wanted to, that is where I would go ahead and do so. You guys have to realize that if Nvidia gets down to like $80, you're talking about a 40% decline. 140 minus 80. Yeah, it's a 43% decline in the stock. If it gets back down to like $80, gets to $70, it's a 50% decline. I don't even know if you get this low, but if you do, for me, it's a definite buy. I will probably buy more if Nvidia gets back down into this price. And I do think that you're going to see Nvidia in the 90s. Okay, I don't think that the pullback in Nvidia is finished. I do think you're going to see 90s. So if I didn't own it, that's a spot that I'd be looking for. Now, with that being said, that's because I'm identifying for you support levels. And one support level for Nvidia is these 90s. And what I'm looking for from a short-term perspective for like a quick trade is actually a bounce in Nvidia off of this level. So I'm looking for Nvidia to continue to pull back into this area, find support off this previous all-time high flat top resistance from earlier this year. That's also the support level that stepped in there on August 5th when you had the big gap down day. But then you have this yellow line also. The yellow line is a 200-day moving average, and that's going to work its way up over the next couple of days up into those low 90s. And that's a spot where I would say for a trade, I think you get a bounce. I think you get a bounce off that level there for Nvidia. Okay. John, we got to welcome John. Everybody welcome John, newest member to the group. Everybody welcome John. John's the newest member to the group. Everybody welcome John. So we are now down to 17 spots. These are down to 17 spots. All right, these spots are going to go, guys. And why 16? Oh, I'm sorry. On the screen, on my screen, it says 17. I still have the Keith message on my screen that says 17. So we got John. That's now 16 spots. That's 16 spots, guys. Sorry about that. 16 spots left. So John, welcome. All right. So those are my thoughts there with Nvidia. Next up, next question that we've got was everybody wants to know what's the market impact of the inflation data that we're going to be getting this week, right? What are we looking at? Because you're getting CPI data on Wednesday, PPI data on all right, looks like we're getting the questions are being put up on the screen. So hold on a second. So this is not this is different from the list that I have. All right. So Marcella asks, hi there. I'm curious if now is a good time to invest in Cava. Okay. So all right. Is now a good time to invest in Cava? I'm going to say no, because I think the stock is extremely expensive right now. I own Cava. I do own Cava in my long-term portfolio. I am very bullish on Cava for the long term. Okay. Now, for those of you that are not familiar with Cava, many of you may not be familiar with Cava because it's not a national brand yet. Cava is, I want you to literally think about Chipotle for Mediterranean food. That's exactly what Cava is. So if you walk into a Cava, it looks exactly like Chipotle. Identical setup. They have identical business models. It's just Mediterranean food instead of tacos and burritos. Okay? It's hummus instead of guacamole. Okay? It's literally just Mediterranean food instead of Mexican food. Okay? That's Cava. I have one by me. I've been there many times. The food is delicious. Every time I go in there, it's busy. It's packed. Okay? So because of that, we bought Cava in the long-term portfolio. It's been a very good purchase for us. It's been a monster of a stock. We got to welcome Kimberly. Kimberly just joined. That means we're down to 15. Okay. That means we're down to 15 spots. Okay. So that's 15 spots. Everybody, 15 spots now. Everybody welcome Kimberly. Kimberly. Bert says, I got to thank Mike TTG for alerting Cava at $55 a share a while ago. Yeah. $55 a share. Way to go, Bert. Way to go, Bert. Bert's already up 100% of his position from this year. I'm going to own Cava for the next decade. I think Cava has potential to become a national brand and eventually become a global brand if they continue to expand and to do well. Okay. So I don't think that right now is really a good place for a long-term investment because the PE ratio is extremely high. The stock is very expensive. What I would do is I'd probably target, again, also the 90s. Look for maybe the mid 90s down the road in the future. The stock might go up from here, though, in the near term, but I think you will get a better entry price than $116 a share. It's actually on my list this week for a possible trade for the long side, but that's for a quick trade. If you're talking long-term portfolio, I think there's going to be an opportunity down the road to get a price cheaper than $116. All right, so I hope that helps answer your question. Stefan says, how might this week's inflation data impact the overall market? Great question. It's going to be very important for the overall market. Right now, the market has stopped caring about inflation and has started caring about the labor market. That's because the market believes that inflation is solved. And now all we need to focus on is the labor market going to hold together long enough for the Fed's rate cuts to filter through the economy, to spark activity, to keep us out of a recession, and to pull off the soft landing. Last week, the markets got nervous that maybe a soft landing is not as guaranteed as people thought it was a couple of weeks ago, that the recent labor market data that came out much weaker than expected over the Tuesday, Wednesday, Thursday. We had a lot of data points come out. Every single one of them was weaker than expected, except the unemployment rate. The unemployment rate came in line with expectations, but every other data point was much weaker than expected. That got people nervous that, you know what, maybe a soft landing is not exactly a guarantee. I think that the CPI inflation data that we're going to get this week has to come in line with expectations. It has to. Because right now the market is not even thinking about the possibility of inflation not coming down while the Fed then has to cut rates to deal with a slowing economy. That's not even in this market right now, right? That's not in the market right now. I don't think the markets could afford a higher than expected inflation report. I think a higher than expected inflation report really sends us to the downside, similar to what you saw on Friday. I think you'd have another wide range candle to the downside if you got a higher than expected inflation report. I think the market needs an inline or cooler than expected inflation read. Okay. Now, I don't necessarily know or think that a light CPI number is going to really move the market higher, because right now the market isn't really focused on inflation. It's focused on the economy. It's focused on the labor market. That's the data that could really move the markets back to the upside if the market feels that the labor market has stabilized. Right now, the labor market is weakening. It needs to stabilize. And if data comes out that it looks like it's stabilizing, then the markets, I think, could recover. But light CPI doesn't solve the problem of a weakening labor market or a weakening economy. So I don't know if a light CPI number is going to actually move the markets higher. If it does, I think it's temporary. You might get like a 1 day or 2 day bounce off a light CPI, but then eventually as a couple of days go on and then roll back to the downside as people just are nervous about where we are with the economy and everything going forward. So I think you need an inline or light number. A hot number, I think, sends this market much more to the downside. We got another question here, guys, from Anthony. We have to welcome. We got to welcome Ruben. We got to welcome Ruben. THD members know why I just said ha. We got to welcome Ruben. Ruben just joined. What is that? 14 guys? Is that 14? I'm sorry. I'm losing. I'm not keeping 14. Thanks. 14 spots, guys. That's 14 spots left. Okay. This is it, right? This is it for the 500 price points. 980 after this. All right. Midnight tonight, or 14 more people join. They got a lot of people on the checkout page right now too, guys. I almost cursed. I wouldn't mess around. I would go right to teachtheoffer.com. Don't wait for me to finish, because I don't think these spots are going to last, because there's a bunch of people on the checkout page right now. There's only 14 left. So go to ttgoffer.com right now. There's no coupon code required. If you see $500, then that means you're one of the 14. You have the double your money back guarantee that's right there on the checkout page. Remember, if you guys can't make your membership fee back at least one time after going through our courses, passing our quizzes, and attending a study group, we're going to give you guys back not just your 500. We're going to give you back 1,000. We can do that because our refund rate is less than 2%. All right. Any questions? Text us 1-888-621-2127. The phone number is on the bottom of your screen. 1-888-621-2127. Text that number with any questions. All right. Next question. Anthony says, how can inflation be controlled despite the government's frequent $1 trillion printing? Why are employment figures often revised significantly? Is it misleading statistics or a valid reason? Man, It's a great question. Oh, that's a great question. So this is a multiple part question. No, the government cannot continue to print trillions of dollars. Yes, that is definitely inflationary. And at some point, it will become a major problem. It's not a major problem right now, because right now, even with our debt being as high as it is, the United States has no issue servicing that debt. Debt is not a bad thing. Debt is only a bad thing when you are unable to service it. If you could service your debt, then debt is actually, can sometimes in certain scenarios be a good thing. It can be an asset, not a liability. In the case of the United States and the United States government, we are spending way too much money. We're spending a lot more money than we're actually taking in revenue. That cannot keep this pace. Okay? We cannot keep that pace up. At some point, we're going to have to either drastically increase revenue, not good. That means insanely higher taxes. Don't want that. Or I don't want that. I don't know about you guys. I don't want that. Or reduce our spending. So at some point, that's going to have to happen, Anthony. There's a lot of misleading information about the timing of that and the sense of urgency of that. It is not a sense of urgency right now where like it's a major problem. The U.S. is going to default on their debt and everything. It's not an urgent issue, but we're on an unsustainable path. So if we just kept doing what we're doing today, if we just kept doing that for the next, I don't know how long. It could be a few years, it could be 10 years, it could be 20 years. I don't know when that would become an issue. That's way too difficult to try to calculate and try to predict. Nobody really actually has that answer. All we do know is that it can't continue to go at this pace. At some point, it's going to have to stop. I actually do believe that when the moment comes, when the U.S. has to drastically decrease its spending to kind of try to balance that budget, I think you're going to have a recession when that time comes, because, you know, a quarter of our GDP actually comes from government spending. I think recently, 26% of our GDP is actually government spending. So when you take that away, that's a big void in the economy, and that's going to be a big slowdown. A lot of the reason why the economy has held together over the last year and a half, 2 years, has been because of the trillions of dollars in government spending that we've been doing. Like, you know, you look back at like jobs reports. Not just this recent one was actually weak for construction, but if you look back over job reports over the last 6 months, you're actually getting increased construction jobs, but the economy is slowing. That's very weird. That never really happens. Usually the construction industry is a very good tell for the state of the economy. As construction picks up, the economy is doing well. Construction decreases, economy is not doing well. So there's usually direct correlation between, or for you to look at construction jobs versus the state of the economy. But recently, when the economy has been going down, construction jobs have actually been going up, and that's because of the infrastructure spending. So you're actually getting trillions of dollars that are being spent on these infrastructure projects, and that needs now a hiring of construction jobs. So you've actually seen government jobs and construction jobs and leisure, hospitality, education, healthcare. Those are the sectors where job growth has been. It's not tech, it's not financials, it's not real estate. Obviously, those sectors have had, you know, layoffs and you've seen, you know, job losses in those sectors. But we're gonna have to, you know, at some point we gotta get this in line. The reality is, guys, you know, politics aside, nobody wants to be the person to do that, right? Like, I don't care if you're a Democrat or a Republican. Nobody wants to be the person to say we've got to stop spending money. Nobody wants to do it. Someone eventually is going to have to. Otherwise, you run into a much bigger problem. All right. Oh, and the what's it called? The revisions. Is there a valid reason? If there is, I don't have one. Why these job numbers have been so incredibly off, I don't know. And I'm not even talking about just this recent jobs report. Last Wednesday, the Department of Labor actually issued a yearly revision from 23 into 24, and they dropped the amount of jobs that they initially thought were added by over 800,000, 820,000 jobs that they revised down. And that's over the course of a year. From 23 into 24, they revised 820,000 jobs down. So that means 820,000 jobs that the market thought were created actually weren't. That's a huge number. To put that into perspective, the last time you had a number that big was 845,000, and that was in 2009. Now, 2009, you make the argument that, okay, that makes sense because the economy cratered. That was the 2008, 2009 financial crisis. The economy, the whole global economy just imploded on itself. The economy just broke, collapsed faster than you could imagine. And okay, that I can see why the number was so off. But the economy was fine from 23 into 24. Why you have a revision of 820,000 jobs down, I don't know. I don't have a valid reason for it. I don't have a valid explanation for it. And then just this Friday, when we got the U.S. labor report, you got another revision down for July's jobs, and you got another revision down from June's jobs. I think the market has gotten to a point where all of these reports continue to get revised down. I think the market's at a point where whatever the number actually comes in at, assume it's 10 to 20% lower and expect a revision the following months, because that's what you've been getting for the last 2 years. So I don't have a valid reason for it. We got to welcome John. John, welcome back. John is, I got a bad headache, guys, like the base of my skull. Everybody welcome John. John, welcome back to the TC family. Everybody welcome John, newest member of the group. Everybody welcome John. John, welcome to the team. Everybody welcome John, newest member of the, oh, there he is. John Lucan goes, I'm back, Mike. It's been a few years, but I just signed up. Woo! Way to go, John. I'm excited for it, brother. I'm looking forward to it, man. Way to go, John. John, welcome back. Guys, again, anybody else that wants to come back home, or if you guys are trial members, you want to come, right? Text us, 1-888-621-2127, right down there at the bottom of your screen. I don't know. I don't have a valid reason for it. I think it's just our government's complete and total incompetence at everything that they do. Raymond, welcome. Everybody welcome Raymond. 12 spots now remain. 12 spots now remain. Raymond, welcome. Raymond, welcome. 12 spots. 12 spots left. These are going quick, guys. I'm telling you. Go to ttgoffer.com. Grab one of these spots. You got the W money back guarantee. I really don't think you need it, but give you peace of mind. All right, guys. Next question. Is the current bond market indicating fear or hinting at a potential recession? Right now, that's a great question. Right now, it's indicating fear. Right now, it's indicating fear. Okay. Right now, it's not indicating recession. But here's the thing, Sharjeel. It's a great question. It really is. And I can tell you're not a newbie just by this question. But you're talking about the bond market. Newbies don't talk about the bond market. So I appreciate the question. Here's the thing. As it stands right now, today, September 8th, the most probable, as far as a probability standpoint based on the data, is a soft landing. That does not mean a recession is not possible. The likelihood of a recession has actually gone up over the last week. The bond market is reacting to that. What we've seen is a drastic drop in yields. That drastic drop in yields is the result of aggressive bond buying. As the price of bonds goes up, the yield goes down. Bonds are seen as a safe haven, a place where you can go out and hide when equities don't do well or the economy doesn't do well. You can go and you can buy a bond, you can earn your little interest over that course of the period of time, and you sit back and you relax, right? And the thing that I want people to understand is that in order for you to have a recession, you need the economy to slow. In order for you to have a soft landing, you need the economy to slow. So you need a slowdown for both of those outcomes. You can't have a recession without the slowdown first. You can't have a soft landing without a slowdown. So soft landings are not pretty, right? Soft landings don't feel good. Soft landings involve a scare, where that's the whole concept, is that it looks like we're going to have a recession, but then you avoid it. That's a soft landing. Okay. So if anyone thought that we were just going to come into this year and the economy was going to truck along, and that's what a soft landing looks like, that's a no landing. That's a no landing. That means the economy is not even coming down. That means you're just continuing to ascend. A soft landing means the plane's coming down, guys. The plane's coming down. But are we going to land on our wheels and everybody's safe and everyone's fine and that plane can take off again? Or is the plane going to crash and people are going to get burned? And it's going to take a real long time to fix that plane before it's ever going to get back ascending again. That's a recession. But either way, you need the plane to come down and touch. That's the scary part, right? That's the part that's not pretty. So by me telling you, Sharice, by me answering this question that, hey, right now it's signaling fear, I don't want you to take that as, no, there's no recession, because I do believe that there still is a very realistic possibility of a recession next year. I'm not going to make a call right now. I think it's foolish to make a call right now. It's too early. I would need to see what the labor market looks like over the next couple of months for me to tell you I think we're getting a recession next year. And that's the thing. The recession would show up next year. It's not going to, I mean, technically you would go into it now, but you would actually reach recession data next year, right? But you would go into it this year, but then next year you'd actually be in it. I need to see what the labor market looks like towards the end of the year. If unemployment goes up towards 5%, then yes, I think you're having a recession. But if unemployment stabilizes in the low to mid 4s, I think you can avoid a recession. I do think you can avoid a recession, but we got to see how we hold up. Next year, Chris, it wouldn't be this year. It takes time, right? In order to have a recession, you need 2 consecutive quarters of negative GDP growth plus the 1% increase in unemployment. You haven't had a 1% increase in unemployment yet, and you haven't had 1 negative quarter, never mind 2. So you're already in the third quarter. The third quarter is not going to be a negative GDP print. So you can't have a recession this year. You can't. Has there ever been a soft landing? Yeah, Roger. In the mid-90s, there was. In the mid-90s, there was a soft landing. And the markets ripped in the late 90s. Lance says, what factors might drop? But before I answer this question, Chris Johnson, to your about, is it going to be next year? Recession and the markets going down, 2 different things, brother. Because remember, the markets will move 6 to 9 months ahead. So if the markets think that we're going to have a recession next year, then the market's going to go down ahead of it. The markets will go down ahead of it. Okay? Just like the markets bottom in a recession, not after. Always remember that. The market will bottom in the recession. The markets don't bottom after the recession. Okay? But because, I want to make that point clear. Next question comes from Lance. What factors might drive the market to either rebound or continue to the downside? Labor market. We talked about this already. Okay. Labor data, a stabilizing of the labor market can help the markets move higher. A continued weakening of the labor market, we're heading further to the downside. Also, an uptick in inflation, we're heading deeper to the downside. Could you explain the formula for calculating risk in a stock purchase, considering price, share count, and total investment? Yes, Jan, absolutely. It's actually very, very, very simple one. Okay. When you are doing equity, it's very simple. Options, harder. Equities, very simple. Okay. So whatever your risk tolerance is, Jan. So let's say your risk tolerance was $400. I just pulled the number out of thin air. Whatever your number is, right? Whatever your risk tolerance is. Let's say your risk tolerance is $400, and you want to know how many shares do I buy? You take your entry minus your stop loss, and you divide your risk unit by that number. So take your risk unit, $400, and you divide that by your entry minus your stop loss. So if your entry is $51.50 and your stop loss is $50.50, that's $1 difference. 51.50 minus 50.50, $1. You do 400 divided by 1. That's answers 400. You buy 400 shares. If you buy a stock at $20 and your stop loss is $18.25, you do 20 minus 18.25. So it's again your entry, $20, your stop loss, $18.25. If that's your stop loss, I'm just giving you examples. You do 20 minus 18.25 equals 1.75. So you would do 400 divided by 1.75 gives you 228 shares. So if you bought 228 shares at $20 and the stock went down to $18.25 and you got stopped out, you'll lose exactly $400. So that's the calculation. Risk unit divided by entry minus stop loss. We got to welcome Drew. Drew just joined, guys. Now we're down to 11 spots. Everybody welcome Drew. Everybody welcome Drew. Newest member of the group, 11 of these spots left. Everybody welcome Drew. Everybody welcome Drew, newest member of the group. What do I think about semi stocks? I think semiconductors have a little bit more room to the downside. I don't think they're done with their sell-off. But Lucian, they're buys at that point, brother. They're buys. I'm going to own all these stocks for the next 10 years. But nothing goes up forever, right? You got to have pullbacks. You got to have sell-offs. But I don't think the pullback in those stocks is finished yet. Rich, welcome. 10 spots left now. Everybody welcome Rich. Now we're down to just 10 of these spots. Guys, go to ttgoffer.com. Grab one of these spots. There's only 10 left. All right. The price is $500. Everything on ttgoffer.com is included. Right. You got the double your money back guarantee. For peace of mind, I really don't think that you need it. All right. Go to ttgoffer.com. Again, everything on that page is included. All right, guys, I'll take two more questions. Edward asks, what's the current market outlook for SPY? I think the SPY has broken a bit. I think that we're going to head to the downside a little bit more. You are coming up to a support level here. You might try to get a technical bounce, but I think that you're going to trade down into here over the next couple of weeks. I just think that the chart's broken a little bit. I do. I think that this double top is so incredibly well defined now that I would be absolutely shocked if next week the market did this. And then 2 weeks later, the market did this. I would be shocked. Doesn't mean it can't happen. Doesn't mean I can't be wrong. I could absolutely be wrong. I'm right a hell of a lot more than I'm wrong, but I'm definitely wrong sometimes, guys. Right? I don't have a 100% win rate. I'm not perfect. Nobody is. But I would be shocked if that happened. I think at this point, we've established the double top. That was also at 21 times next year's earnings. I think that valuation is too expensive. I think we're going to get down here. Right now, we're at around 20.2 times next year's earnings on the S&P. I think that gets into the 18 to 19s over the next couple of weeks as people get worried and scared about, the possibilities of a recession. If you get into an 18.5 to 19.5 times on the S&P, that's another couple of percentage points to the downside. And then I think the market stabilized right there, and the markets wait and see what happens, because 18.5 to 19.5, that's a good spot for the S&P to be. for a soft landing. A recession would take you down to 14 to 15 times. Like, for example, the COVID crash in 2020, we got down to around 14 and a half times next year's earnings. Okay. In 2021, we got to 21 times. And this year we got to 21 times. 21 times next year's earnings are expensive. The historical average is around 17. And the all-time high is 25.7. That was during the dot-com bubble. We have to welcome Will. Will just joined, guys. Now there's only 9 spots left. Everybody welcome Will. 9 spots left, guys. Welcome Will. Guys, again, text us if you have any questions. 1-888-621-2127. And we got to welcome Jacob. Jacob just joined, guys. 8 spots left. Everybody welcome Jacob. 8 spots left now. 8 spots left. All right. 8 spots left. Everybody welcome Jacob. Guys, again, ttgoffer.com is how you guys can take advantage. All right. All right, guys, I'll hit on one more question. Could Mike discuss the inverse head and shoulders pattern on the SPY that he mentioned about 2 weeks ago? What? I never mentioned an inverse head and shoulders pattern on the SPY, so I'm not really sure what you're talking about. Yeah, I have no idea what you're talking about. I don't. There is not an inverse head and shoulders on the SPY, so yeah. I mean, maybe I was talking about a different ticker symbol, or maybe you misheard me, but there is not an inverse head and shoulders on the SPY. An inverse head and shoulders? An inverse head and shoulders? Are you guys talking about like an intraday pattern? I mean, there's not one on the daily chart. I mean, we could have talked about one intraday if that's your talk, but that's just for a quick day trade. That's not like market direction. But I definitely did not talk about one on the daily chart. There's not one on the daily chart. Maybe we're talking about something intraday for like a quick day trade pattern. But yeah, right now, I mean, on the daily chart, there's not an inverse head and shoulders. There's not one on the daily chart. All right, cool. That's it. It was last Friday? What? There's not an inverse head and shoulders on the SPY. Unless you're talking about like a day trade intraday. Oh, you guys are I see you guys are talking about this. I see it right now. So I just pulled it up. I see exactly what you're talking about. You're talking about this right here. Right there. That's an inverse. This is an intraday pattern though, guys. This was a quick day trade. So I'll just show you. Let me draw it. I'll draw it just so you guys can see it. But you guys do not mistake. Let me be very clear. I'm not sure who asked this question. Let me make myself very clear. There's a very big difference between the time frame in which you identify these patterns. Okay, very important. Very, very, very important. The time frame in which you identify these patterns. Okay, because you're looking for a quick little trade versus like overall market direction are two completely, entirely different things. Very, very, very different. Your analysis is different. Your trade is different. Your actions are different. Your everything is different. Okay. But let me just go. Let me go to a 5-minute chart. Probably you guys can probably see it better. All right, here it is. Okay, I'll highlight it for you. Right here it is. There's the inverse head and shoulders, and I'll draw a line across. I'll draw a line across the neckline. Oh, it's already there. So there's your neckline, right? And then here's your left shoulder. Here's your right shoulder. Here's the head. Okay, this is an inverse head and shoulders pattern. You break back above the neckline, and then you guys can see what the result was. The market's rallied into the close. right? So there's inverse head and shoulders, left shoulder, head, right shoulder. I'm sorry. When you asked, whoever asked the question, I didn't mean to poo-poo it at first, but I just like, I thought I was looking at daily chart and there's not an inverse head and shoulders on the daily chart. I didn't realize you were talking about this from Friday, which was a short intraday pattern, but here it is. Left shoulder, head, right shoulder, inverse head and shoulders, neckline break, rally into the close. And this was just a quick trade that people caught going into the close on Friday. That's it. We have to welcome Pedro, and then we got to welcome Tony, and that means we're down to just 6 spots. Okay. All right. So Pedro, Tony, welcome. All right. Pedro, Tony, welcome. That means we're down to 6 spots. 6 spots. All right. 6 spots. Everybody, welcome. And Tony's a welcome back. Tony actually used to be a member. So everybody welcome back Tony. Tony used to be a member. Tony, I'm glad to have you back part of the group, brother. Glad to have you back part of the group. All right, guys, let me go through just some trade ideas for you all this week. First of all, congratulations to everyone that followed me with Palantir. I have been pretty bullish on Palantir lately since it was in like the low 20s. And Palantir now, the news being confirmed. I told you guys this a few weeks ago that I was hearing rumors that Palantir was going to be added to the S&P 500 a few weeks ago. That after their earnings report, they actually qualified for the S&P listing, and their earnings were fantastic. They had the big gap up, and that qualified them for S&P inclusion. And it is now confirmed. Palantir is being added to the S&P 500. Dell is also being added to the S&P 500. But I think Palantir being added is fantastic. I love it. I'm long Palantir. I'm going to be long Palantir for a while. I think this stock has triple-digit potential, meaning like I think that the stock has potential to be, north of $100 a share in the next maybe 5 years. I think that we could be looking at, $100 to $120 stock in the next few years, not like 1 or 2 years, but I think it takes more time than that. But I do think you fast forward 5 years, 6 years from now, this is, into the hundreds. I do like the company. I like that I'm bullish. And this is actually on my list for trades this week for a little bit more follow through on the back of the S&P inclusion. So I'm actually going to see if there's maybe support around 32.50 and see if we can get a new 52-week high print on Palantir. There's resistance at 33, but I'm looking for Palantir to take out 33 and push towards 34, 35. That's Palantir. I'm also looking at Cava for a possible long. I like how Cava held this earnings gap up. So this was the big gap up from earnings. And you can see we held. Well, the market took a dump last week. Cava held beautifully. You pull back in, tested trade line, nice little bottom tail there. And I just think that Cava's got a chance to push up here towards 120. 120 is resistance. Okay. 120 is resistance. It's a gap entry point. Okay. So I would look for the long on Cava, take profits at 120. If you break 120, gap fill would take you all the way back to 126, but there's mid-gap resistance at 122. I'm just looking at for Cava for longs, 120 and then 122 for targets. But I am going to try to see if we can get Cava headed to the upside this week and see if we can maybe get a candle that looks like this and then a candle maybe that looks like this. And we can maybe just get a nice little move to the upside there on Cava. Okay, then some short ideas. Snowflake. This is one that I'm not going to short tomorrow, but it's going to be on my list too short. You're testing all-time low support at 107, 108, and this support level is not yet broken. It's being tested. But if Snowflake extends past this breakdown level, this breakdown bottom is 107, 108 is that breakdown bottom where we closed at 108. If you see Snowflake do this, like get to like 106 or 105 and close down there, then that's going to be a confirmed bottom break. And then I'll short bounces into 107, 108. I'm going to wait for the confirmed level break. Level's not confirmed, broken yet. If this stock bounces back to 110 tomorrow, it's not broken. That level held. That actually might be a call. That actually might be a buy signal. If Snowflake goes back to 110, 111, you actually might get Snowflake then back into the 114 to 116 zone this week. If the stock recovers tomorrow, that actually might be a buy signal. So I'm going to watch Snowflake very carefully to see what it does tomorrow. If I get further downside tomorrow and we close like 106, it's a short for me at 107, 108. If tomorrow the stock actually pops back up and closes up around 110, I would actually say at that point, you might get a little bit of some bottom feeding action, and you might get a little bit of a recovery on Snowflake that looks something like that, and it might be a long. So I'm kind of neutral on Snowflake coming into the week because the level that we're at is so big. It's the all-time low support level, and that support level has been in place for several years. So we have to pay attention to how the stock reacts at that level. That price action gives me the long or the short confirmation signal. Then last but not least, we have Boeing. And Boeing here is just kind of breaking down underneath this prior support level. You can see support here at 160, support here 160, 160, 160 for 3 days. You then broke it, closed underneath it on Friday, bounces back into 158, 159. I'm sorry, not 158. When bounces back into 160, 159, 160, I think you look for shorts and look for Boeing to continue to drift into the mid to low 150s. Okay, that's it, folks. All right. That wraps up top trade ideas there for the week. That takes me to giveaway time. The second code word for tonight's giveaway is, I actually forgot it. Anxiety. The second code word for tonight is anxiety. Okay, anxiety. Second code word for tonight is anxiety. So 2 code words. I gave you the first one already. It was market. Second code word is anxiety. Okay. Market anxiety. Those are your 2 code words for this week. We got inflation data coming up this week. Markets are anxious. Labor data from last week caused that anxiety. You feel it. Market anxiety. Those are the code words. So that brings us to our giveaway. The way this is going to work, if you're a lifetime member, you're going to win a skip the line bonus one-on-one mentor session with any one of the mods of your choosing. If you're an annual member, you're going to win STR for free for the whole year. That's worth about $700 a year. You guys will just get that included for free for the whole year if you're an annual member. All right. So do something special for the annual members. You guys participated over the weekend. You guys asked a bunch of questions. I had a great time talking to you guys. I hope I answered a lot of those questions. I wasn't able to get to all of them. There was a ton of them, but we just picked a couple of them randomly, and I hope that we were able to answer a lot of those questions. We have to welcome Eugene. Guys, Eugene just joined. Everybody welcome Eugene. Eugene, welcome to the family. 5 spots left now. That's it. Hurry up. Go to ttgoffer.com, guys. 5 spots left. And again, the double your money back guarantee. What do you have to lose? It's right there on the checkout page. Go read it. Double your money back. Give you guys peace of mind. All right. So code words are market anxiety. Joe's going to spin the wheel. If your name is called, you're going to have 2 minutes to send a text message to the phone number you see on the bottom of the screen. So see that phone number? 786-292-1606. That's the phone number to text. All right. So if your name is called, you're going to send a text message to that phone number. All right. Good luck, folks. And the first winner is Sue Dianaran. Oh, man, I butchered that. That wasn't even close. Sue Dianaran. Sue Dianaran. I still feel like I'm butchering that. That doesn't sound right at all. Sue, you have now 1 minute and 45 seconds to send a text message to 786-292-1606. 786-292-1606. And Sue is a lifetime member. Sue, you have 1 minute and 30 seconds. 786-292-1606. 786-292-1606. You have 1 minute and 20 seconds to send us a text message and give me both code words. Give me both of those code words. You got 1 minute and 5 seconds, Sue. And the bonus one-on-one mentor session, skip the line. That means skip the line. So let's say if you want to do a one-on-one with me, my first availability is November 11th. You can do one with me this week. Oh, she got it. Guys, Sue got it. Sue, did I butcher your last name? I feel like I did. But Sue got it, guys. Congratulations, Sue. Everybody, congratulations. Sue did get it. She just sent the text. Sue, I really feel like I just destroyed your last name. I apologize. All right, Joe. That means we're going to spin that wheel one more time. Good luck, everybody. Congratulations, Sue. The next winner is Keith Yao. Keith Yao. Everybody welcome Keith Yao. Keith Yao. Thank you, Keith, for making it way easier. Keith Yao is an easy one. Keith, be like Sue, though. Be like Sue. 1 minute, 45 seconds, Keith, to send a text message to 786-292-1606. Keith, 786-292-1606. Keith, send a text message to that phone number. Give us both code words. The prize is yours, brother. Keith, you got 1 minute and 30 seconds left. 1 minute, 30 seconds. Now 1 minute, 20 seconds left. 1 minute, 15 seconds left. Let's talk about how pathetic the New York Giants are. What a joke. I tried to be optimistic this year too. I really did. I tried. I tried. And I was like, Daniel Jones was hurt. Their offensive line was so bad. They didn't have any weapons. Now their offensive line is much better. Daniel Jones is healthy. They got Malik Neighbors. I'm like, they're going to be better. Holy crap, did they suck. My goodness. Oh, man. I don't know what's worse. So it's funny. Two of my closest friends, right? While we wait for Keith. Two of my closest friends, Cowboys fan and a 49ers fan. And I'm a Giants fan. And we have this discussion of what's worse, to be a Giants fan and suck, but just win a championship here and there. Be a 49ers fan, basically go to the Super Bowl every year and lose. Or be a Cowboys fan, be good every year and get knocked out of the playoffs in the first round. Which one is worse? Like, is it worse? I said the best is to be the 49ers fan. I mean, you go to the Super Bowl, but he's like losing in the Super Bowl every year. Yeah, but dude, at least you're making it to the Super Bowl, right? What's worse? Would you guys rather be a Giants fan and suck, but then like randomly win a Super Bowl here and there? Or be a Cowboys fan, think you're going to win a Super Bowl every year, be good every year, and then suck as soon as you get to the playoffs? I don't know which one's worse. I mean, I think it's Cowboys is worse because you have high expectations every year, and then you just blow it every year. Oh, Keith got it. Guys, Keith got it. While I'm talking about football, Keith got it. Keith got it. Keith got it. Everybody, congratulations. Keith got it. Keith got it. Yeah, I said I'd rather be the 49ers fan. The 49ers are a damn good football team. I can't watch the Giants play football. I couldn't watch them play football last year. I couldn't. I'd rather go watch the junior varsity team for the town I live in. I don't even have a kid that plays football. My kid is not even 6 weeks old. And she's a girl. I mean, I can't watch the Giants play football. I really can't. Today was brutal. Sam Darnold. apparently he's a Hall of Fame quarterback. He's not. That does it for me, folks. We're finished. We'll leave it out. We'll leave it there. Even the Yankees suck. Even the Yankees are in first place, but I got to be honest with you, man. They don't do it for me. They got too many weaknesses. Their bullpen's an issue. They're not they don't scare. They're not a scary team in October. It's not. But my New York Knicks this year. Watch out for the Knicks. Knicks Celtics this year in the East is going to be a hell of a battle. I do think that's going to be the case. But that's it, folks. That does it for me. I'll see you guys all tomorrow. Have a wonderful rest of your evening. Go to ttgoffer.com if you guys have not done so already. We only got a handful of these spots left. You'll know you're one of the spots. If it says 500, check out. You're good. There's no coupon code needed. If it says 980, then that means we've ran out of spots. The price is now 980, which is still a bargain considering everything that you guys are going to get. Everything on ttgoffer.com, everything on that page is included. You don't have to pay $1 extra for any of it. It's all included. You got the W money back guarantee. I don't think you need it. But folks, it's there for peace of mind. Prove to you how much we believe in the platform that we've created. I'll see you guys all tomorrow. Have a wonderful rest of your night. Subscribe to the channel. Turn on your notifications. Don't ever miss out on these lives. See you.